When you have too much of market information, like information from TV, newspaper, WhatsApp messages, etc., this will lead to confusion and will complicate trading decisions. Too much data will end up with too much analysis, and over analysis will lead to paralysis. So, one should follow simple and less complicated ways of doing things. Let it be investing or trading, which will help in sustaining for long term. Welcome back to FinveStocks, where we make everyone understand the basics of money management. Before going into this video, make sure you watch earlier videos of this series, which is mentioned in the I button. In today's video, we will talk about different type of charting. What are the different types of charts available? How to use, where to use and when to use. There are different types of chart such as line chart, bar chart, Japanese candlestick chart, Renko chart, P and F chart, that is point and figure chart, etc. Here we will see some symbol charts in detail. First one is the line chart and the second one is candlestick chart. Now let's see what is a line chart. A line chart is a graphical representation of stock price that connects a series of data points, that is trading days, with a continuous line. This is the most basic type of chart used in finance, and it typically shows the stock's closing price over time. Line chart can be used for any time frame, but the most common one is day chart. So when to use these line charts? If you have continuous data points that you would like to represent through a chart, then line chart is a good option. This graph is especially effective when trying to identify a trend or pattern in your data. For example, if the stock price moves continuously up or down, then it is easier to identify the trend, whether it's a uptrend or a downtrend. Traders can be flooded with too much information when analyzing a stock chart. Too much details regarding price information and indicators can give multiple signals that lead to confusion and complicate trading decisions. Overanalysis leads to paralysis. A line chart will help traders to clearly identify key support and resistance levels, trends, and to recognize chart patterns, etc. It will filter all the external noise and gives out the most relevant symbol information. So it is one of the simplest form of chart. Line chart can also be ideal for beginner traders to use for their daily simplicity. Let's see how to plot a line chart. Line chart is normally a XY chart. So XY chart means it's a 2D chart wherein on the base it is X-axis and on the vertical side it is the Y-axis. In Y-axis we will note the price of the stock. On X-axis it will be duration. The duration can be in seconds, minutes, hour, days, week or month. So we will represent price on the axis. Say the price of stock is starting from 25, 50, 75, 100, 125 and 150, 175. Here in this case we will take the example of Zomato. So the duration can be in terms of months. Here we will represent 10 months. So the overall duration is around 10 months and price is in the range of 175. So in case of Zomato, its IPO price was around 72, but it listed at around 125. Once it is listed at 125, it was in the range of 125 to 135 for the first 3 months. Here for example, we will plot 125 on the first month. On second month, it can be say 130. Again, it come back to say 120. Then it was in zigzag manner for first few months. After that, it went to 150, then 175. From that, it dropped to say 100, then 80. Now it is stabilizing near 80 range. So if you want to plot the XY chart or line chart, you need to connect all the dots. Each dot represents the closing price on a particular month. So for first month it will be like this. After that you connect all the dots. So it is basically the line chart. On these points you can smoothen the curve using a simple line. So it shows the line chart. So line chart have lot of benefits. First one is it is very simple. Second point, it is very easy to use for beginners. And line chart is commonly used for identifying the pattern. Japanese candlestick, it's very difficult to identify the charts. So for identifying the pattern, line chart is being used. Patterns such as head and shoulder, inverted head and shoulder, a double top, double bottom, rounding bottom, cup and saucer. For identifying all these patterns, line chart is the best one. Normally, line chart is used for identifying the pattern, and for entry and exit, Japanese candlesticks are being used. Line charts is the simplest and easiest chart for beginners. Volume, moving averages can easily be applied to a line chart as beginners can continue their learning journey. This will help to teach basic chart reading skills before learning more advanced techniques such as reading Japanese candlesticks, etc. To summarize, line chart displays information as a series of data points. It shows closing price history using a single continuous line. Line chart is very easy to understand and simple in form. Line chart reduces noise from less critical times in the trading day such as open, high, low prices, etc. Because of its simplicity, traders look to identify patterns or trends using line chart types. Normally, line chart is used for identifying the pattern, and for entry and exit, Japanese candlesticks are being used. In our next video, we will see how to represent a candle. What are the different type of candles available and how the price fluctuation for a particular duration will reflect in a candle, and what are the different types of bullish and bearish candles available in technical analysis. So stay tuned for an interesting session on technical analysis going forward. Please do like if you like the video and don't forget to subscribe to get the notifications of upcoming videos on personal finance and stock market. Please post your valuable comments. Do follow the Friday basics to make your stock market journey easy. Thanks for watching and have a good day.